Hi, if you are between 18 and 35 and feel like the entire stock market is just AI, this is your wake up call. Right now, a tiny group of tech and AI linked stocks are carrying a massive part of the market. Retail investors, people just like you, now make up a much bigger slice of daily trading volume than a decade ago, and a huge chunk of new accounts are from 18 to 35 years olds. Translation: your generation is officially moving markets, but it also means your generation can be the one left holding the bag if this turns into a bubble. So here is the uncomfortable truth nobody on TikTok is explaining clearly. Yes, AI is real. Yes, some of these companies will probably dominate the next decade, but history is brutal. World changing technologies can still have stock bubbles that crush investors before the technology fully wins. Think .com 2.0. Amazing tech, awful timing for people who bought at the peak. In this year, many analysts and even major CEOs have openly warned that AI feels bubbly. A lot of money is crowded into a handful of AI names, and some reports show most companies spending billions on generative AI are not yet seeing real returns. That does not automatically mean crash tomorrow, but it does mean this: if you are a young investor chasing hype with a rent money, you are playing a game you do not control. So, what should you actually do? Let us break it down into a simple, no BS framework tailored for you. Step 1: stop thinking like a lottery ticket buyer. Most 20 somethings say they are investing, but they are actually just placing emotional bets on the hottest narrative. If your brain thesis is this stock is everywhere on social media, you are not investing, you are volunteering as exit liquidity for someone smarter. Step 2: understand where you are in the story. Every hype cycle follows a similar arc: discovery, euphoria, down, reality check. Right now, AI is somewhere between euphoria and show me the money. Companies have raised trillions in market value on the promise of future cash flows. If those cash flows are slower or smaller than expected, even great businesses can see their stock prices fall hard. Step 3: decide who you can want to be, trader or builder. If you are a trader, accept that you are playing a short term game against algorithms and institutions. You must have a return plan, entry, exit, max loss per trade. Never risk money you actually need in the next 1 to 3 years. If you are a builder, most people shouldn't be. Your goal is to build net worth steadily over 10 to 30 years, not flex screenshots this month. That means broad diversification, boring index funds, and position sizes in hot sectors that will not destroy you if they drop 60 to 80%. Step 4: use the 5-minute sleep test. For every stock, ETF, or options play you buy, ask yourself, if this dropped 50% tomorrow and took 5 years to recover, would I still sleep at night? Or would I panic sell and hate myself? If the honest answer is panic, your position is too big or your time horizon is too short. Step 5: stop chasing only the loudest names. Yes, chips, data centers, and AI software have gone insane this year. But quietly, there are also boring sectors, non AI tech, and diversified ETFs that are performing well without being on every thumbnail. You do not need to guess the one magical AI winner to build wealth. You just need to not blow yourself up. Now, step 6: automate your advantage. The real edge of an 80 to 35-year-old is not hot information, it is time and consistency. Set up automatic monthly investments into, just like SIPs, a broad US index fund or ETF. Optional, a small satellite bucket for AI and growth stocks, capped at a percentage you can emotionally handle. That way, if there is an AI bubble and it pops, you will keep buying through the downturn instead of trying to perfectly time the top. Now, the step 7: educate yourself faster than the hype can manipulate you. Before you buy another AI to the moon stock, read one actual earnings report summary. Look at revenue, profit, and how much they are spending on AI versus how much they are actually making from it. Ask, is this a business or just a story? Here is the mental shift that will change your net worth. You are not missing out when you skip buying at euphoric prices. You are preserving future buying power for when the story and the numbers finally match. The market will give you more chances, bubbles, corrections, new trends. This game never ends, but you only get one set of compounding years in your 20s and early 30s. So, do you want to be the person who chased every hype cycle and ended exhausted? Or the person who quietly let time, discipline, and smart risk management do the heavy lifting? If you are serious about not being exit liquidity for the AI bubble or any bubble, hit subscribe. Drop not exit liquidity in the comments and share this with one friend who is about to FOMO into the top. Your future self will thank you. Thank you.